Hello, good evening, good afternoon, wherever you are. It might even be good morning to some of you. Hopefully, you are doing well and this market is treating you well. The market sold off today. It's been a little bit of a mixed week. We've had some days when the stock market, the indexes go up and they go down. Today, we had a down day. All three major indices were down, but some stocks flourished. Nvidia continues to go higher. Meta higher. Netflix higher. Amazon higher. Eli Lilly caught a nice bid higher. And our friends over in the beverage area, thanks to Pepsi, who announced earnings today, went higher. So the two earnings that came out that I think moved the market, first was Delta, the airline company. They announced that they did better than expected in the third quarter, and their forecast is better than expected. That's going to help out consumer discretionary, the travel stocks, like a Booking. It caught a bid, and maybe a couple of others are benefiting from that. And I think the airlines are in the industrials, and Delta's market cap, here it is, airlines, it was in the green because Delta's stock went up so well. So it's about picking the right stocks that are going to do well. Now, the AI trade has certainly been working. Can't argue with that. At some point, I expect it's going to give up some of those gains. But for now, enjoy it. NVIDIA and others, AMD has had a terrific maybe week and a half. So it keeps going higher. Picking the right companies, finding good companies that are priced right, and investing in them at the right time. As we'll go over and over again, the market will offer nice discounts on stocks. It'll do it. If you look at a 2-year timeline, often the market will discount a stock. We got to be ready. We got to do our analysis, our research, and make sure that we're buying stocks at a good price so we can get a very good rate of return. And as we go through stocks today, I'll be looking at fundamentals. I'm going to be looking at top line revenue growth to see if businesses are growing, just to measure, is this a business that's going through a growing cycle, or is it a slow grower, or is it a no grower? What kind of profitability does that business have? Do they have high profits, medium, low profits? And what kind of cash flow do they generate? At the end of the day, we're buying these entities. They're supposed to create cash. That cash goes to the balance sheet. Eventually, that gets returned to the owners, stockholders. That's who we are if we own a stock. That's why cash flows are so important. So I've created my own model where I model out a forecast for cash flows, discount those future free cash flows to today's value, and then compare it to the current stock price. I also look at profits for the company, look at the profits, what kind of expected growth on profits I would expect, and then discount those profits to today's value. And I'll show that to you on stocks that we cover. Now, there's probably going to be a lot of members of the channel, and you guys know the routine. If there's a stock you'd like to see, please put it in the chat. We will take a look at the stock that you would like to see. We'll look at the fundamentals. We'll see where it's priced. We'll see how valuable it is based on cash flows and profits. And we'll go through that whole analysis. If you're not a member, no big deal. Pay a $5 super chat or become a member on the fly. It's very easy. You go to the home screen of my channel and get signed up. Look for the join button. Looks like we've got Big House Juice is a member online. Shadow Guy, good to see you. Herdo, great to see you. Thanks for tuning in, guys. So I've got a list of stocks that I want to take a look at. There's also a list that's produced by Stock Analysis. And I think it's an interesting list because it changes. When I get to that segment, I'll go over that list. maybe it's a list that you might want to keep an eye on. Of course, when you guys request a stock, I'll put that into the queue and we'll go over those stocks as they come up. So just to get the wheels moving, I'm going to go over OSCR. OSCR did not have a good day. It was down 5.78. Herdo, you are so kind. Thank you so much, sir. For the super chat, $10 super chat. That is incredibly generous. Thank you. OSCR Health down 5.78 today. Now, being an investor in OSCR Health is not for somebody who wants stability, predictability in the stock price, because this stock moves. And the good news is I'll show in another tab that I have. I think the stock is going higher if I look at the charts. But for now, let me look at the fundamentals and let me look at the news that might be moving the stock. So we've got a $5.3 billion market cap, revenue $10.7 billion. So you're paying, the revenue is 2 times market cap, which is normal. This is a health insurance payer, similar to United Healthcare. OSCR is much smaller, but it's in the same particular industry. And this company wants to focus on either small businesses or individuals. Analysts don't like them because analysts have not liked healthcare a whole lot. So I'm probably going to disagree with the analyst. So what might be causing the stock to sell off is this government shutdown. If you have a shutdown and you have the government not paying the health insurance companies, maybe creating a logjam of cash flow, that could affect the business. So that could be temporary bad news. It's not news or something that OSCR Health caused. It's the government being a government, arguing about, what the country should spend money on, and they'll need to figure it out. That's what politicians do, and it might take a while. But I'm not overly concerned. When it's news that a business is subject to, but they didn't really do anything to cause that bad outcome, it's more tolerable as opposed to maybe a business actually makes mistakes or makes bad decisions, and it does cause bad things to happen to the business. That is worse because I believe it's a lack of execution. It's a lack of the ability to get the job done. But in the case of just the government shutdown causing some undesirable effects on OSCR, I'm not overly concerned about it. Why am I an investor in OSCR, and why do I stay invested? I'm looking for businesses that are going through a high growth period, and OSCR certainly qualifies at 48% growth of that top line. And the revenue is 10.7 billion. So 48% is a pretty big chunk that's being added to that top line revenue. I really like that about them. I also like that OSCR Health's addressable market is very, very big. They're trying to insure individuals, small businesses. And if you count that population, it's massive. So for a couple of reasons, I want them to succeed. One, I'd like anybody who wants insurance to have a really good access point, a brand they can really trust. And OSCR can become a brand that they can trust. A small business wants to maybe insure 2 or 3 people. Great. That'd be OSCR Health's bread and butter. As opposed to the bigger insurance companies like United Healthcare, they're looking for gigantic corporations that have 100,000 employees, and then all those employees will have United Healthcare. That's the big prize for those businesses. And United Healthcare is competing against Elevance and others to try to lock in those corporate clients. So I really like Oscar Health's ambitious agenda. And I think they could really go far because the addressable market, the market size is massive within that particular demographic. Now, health insurance companies are not going to wow you with their profitability. They're actually going to be tight margins, but they generate cash, and cash is king. In the case of Oscar, it's generating $1.2 billion of cash already, and they're a little over a $10 billion revenue company. So as the volume picks up, their cash flows will pick up. Now, I've been monitoring what analysts have to say. They don't have a lot of good things to say about Oscar. That's okay. At times, analysts are on one side of the boat and I'm on the other. I do my own analysis and make my own estimations. For example, analysts believe that next year there's going to be a down period for revenue, and I just don't see that. And I haven't seen where Oscar has communicated, hey, we're going to have a slow period next year. Now they're going to announce their earnings. And earnings are going to be announced on November 6th. So I'll really tune in and really focus in on, are they going to continue to grow? What's the forecast for 2026? We'll see how that plays out. If they have a good earnings report, this stock, like it's done in the past, it would just go up. For this stock to go up 20% a day is not out of the ordinary. It's done that before. On this occasion, it went from $14 a share up to $21 a share. So a really jagged rise. Unfortunately, it came back down to earth. But overall, when I look at Oscar Health, I'm seeing that although there's really high volatility, the highs have an upward trajectory and the lows also have an upward trajectory. I think my colleague Darrow would call this a channel of some sort. For me, it just looks like a trend that this business is going up because the lows are going higher, the highs are going higher. That's a very good combination, but it all depends on earnings for Oscar. If they're reporting good numbers and they have a positive outlook on their future, then this stock's going to really, really go high. Overall, the stock for me, it's discounted, and I'll show you my valuation. And I value a company based on the cash flows it produces. And I'm actually only taking a fraction of what they're producing just to be conservative. I'm using a high discount rate, even though as we see interest rates, and this is one thing that we got to consider, interest rates are going to fall. And as interest rates fall, it helps small caps. It really helps small caps because small caps with the higher growth rates, higher upside potential become really attractive. And as interest rates fall, if I were to take the discount rate down to 9% as an example, the value of Oscar goes up significantly. But since they're small, I'm going to keep it at 11. So overall, I like Oscar's fundamentals on cash flow. I think the earnings per share support the current stock price. Actually provides a 7% discount. So combined, Oscar's still discounted. I like the top line revenue growth so much because it's companies like these that I'll wake up a year, 2, 3 years later, and I'm sitting on a 300% rate of return. I'm sitting on a really high rate of return. Yet I really feel like I understand this business. I'm picking it up at the right times. Right now, I'm not buying any more shares. I'm waiting for that earnings report to come out on November 6th, and then I'll make my plans to see if I want to add capital to them. So Oscar Health had a bad day, but I'm not too worried about it. All right, moving along. It looks like Shadow Guy is on. Carlos, great to see you. Thanks for joining. Dig South, good to see you. I think I missed Soul. Good to see you, Soul. Thanks for joining. Big House Juice. Can we get an update on OPRA? Yeah, definitely. So I'm going to go over OPRA. Let me get into Applovin, and then we'll do OPRA. Okay, so we finished Oscar. Now let's talk about Applovin. And Applovin over the last 5 days, it's been kind of a wild ride. Some news came out that an investigation was going to be done on the fact that Applovin is being accused of using user data inappropriately. And that same story came out like 6 months ago. And I think the market digested that story and took the stock higher. But in after hours, this stock really plummeted like 14%. And I bought more Applovin on that evening in after hours. I'm really glad I did, because the next day it came back like 8%. But it has kind of settled down. Now, as I showed early in the stream, some sectors are really selling off. It's not like every stock's going up and Applovin's the only one that's going down. There's a pretty good list of stocks that are selling off. So this one here, is this something to be concerned about? First, this stock has been flourishing. The 1 year, 318%. So maybe giving up some of its gains is kind of healthy, or it's okay. I'm seeing that Applovin, and I'll show you my valuation in a few minutes, is priced a little bit above its intrinsic value. This stock is a $203 billion market cap stock. It was added to the S&P. It's a legit company. $5.74 billion in revenue, net income, nice profitable company. P ratio is really high, but they're going to have a high growth rate. I'll show you in a minute. Forward P of 50. Analysts think it's a little expensive. I'm agreeing with the analyst, by the way, and I'll show you my valuation in a bit. When we look at their growth, 78.9% on a significant number, $5.7 billion. That's a pretty good number. If you're growing at nearly 80%, that means you're adding about $4 billion of top line revenue on your income statement. That is moving. That's moving fast. And you can see that they accelerated their growth. So they're doing something that's working. Their clients that use Applovin's an ad tech company. They're the ones that are helping advertisers reach an audience, whether they're trying to reach them when they're using Facebook, YouTube, Netflix with the ad version of Netflix, or Amazon Prime, or wherever your customer is. Applovin software helps advertisers target their ideal prospect far better and get them a better return on investment on advertising dollars. They're good at it. That's why businesses are coming and signing up with Applovin. Having said that, it looks like in 2022, they didn't have a good year, but a lot of businesses suffered losses in 2022. Then they started to really get some momentum going. And ever since then, they're growing at a higher percentage rate while their top line number keeps getting bigger. That is a fantastic combination. Palantir's doing the same thing. Palantir is getting bigger and their growth rate is going higher. It's abnormally impressive for companies to do that. And Applovin's doing that, which is one thing that I've noticed. And that's why I bought shares in Applovin earlier this year. The other fundamentals are going to look incredibly strong for Applovin. You look at gross margins, really high. Profit margin, really high. There's a ratio with software companies that if you add profit margin plus gross margin and you're above 40, you have a good investing opportunity into a software company. It's a good software company. Well, these guys are 42 plus 78. That's 120. So they are 3x what would be considered a good software company, which is why the market is really excited about this stock. So if it keeps selling off, I'm going to buy more Applovin. I think it's a terrific, terrific opportunity for me. I've already made a good rate of appreciation on Applovin. This stock here should continue to grow quite well in the future. It's going to be almost a $12 billion business in 2028 if I believe the consensus forecast that analysts are putting out there. So this looks really good. Now, one thing the market will do is sometimes it disguises what it's doing. It offers really good prices on great businesses. And in the case of Applovin, like a lot of stocks, from the period of March through April, they were heavily discounted. But that's when our antennas went up and said, well, where are the businesses I would love to have, but tend to be expensive? Applovin. So I bought Applovin. And I'm sitting on a really good gain because I acted, did my research, and bought when everybody was scared. And we went through that together. This was stuff that we were going through, processing how the market was selling off stocks. In the case of Applovin, it discounted this terrific business. Great time to buy. And the market will do this over and over and over again. It'll discount great businesses. Applovin, Google, Uber. These are terrific, well-known businesses, and it'll do that. So we got to be vigilant and take advantage of those opportunities. And I see your comment. Thank you so much, Justin, for the super chat. I'm going to get to Fiserv. Give me a few minutes to finish my thought, and then we're going to get into OPRA and then Fiserv, and we'll do full analysis on Fiserv. Let me note that here. So I wanted to compare Applovin to two other ad tech companies. We got Applovin, Zeta, and the Trade Desk. The biggest company listed is Applovin. Trade Desk is smaller in size from a revenue perspective, and then even smaller is Zeta. If we look at the year to date, Applovin wins this contest, up 94%, and Zeta is up just a little under 10%, and the Trade Desk has really been sold off. The Trade Desk, their revenue has been going down, and I showed you how Applovin's been growing. And I'm not a Trade Desk a stockholder. I do own Applovin and I own Zeta. And when one competitor in a market is growing and another competitor is contracting, that usually shows that the growing competitor has advantages, has a better product. Customers like that, solution better. And I think that's the case with Applovin. So I think the Trade Desk is risky. It may look pretty discounted, but I would not touch it because, again, I have to understand, is that business, better than the rest? I don't have to buy the best one in the market. For example, Zeta is not number one, but they're small and they're growing. And so far, so good. I'm making money on Zeta. I'm making more money on Applovin. But as we compare three peers on a graph, it looks like Applovin looks really, really good. So that's Applovin, and I'll show my valuation on Applovin. And right now, Applovin's fairly priced. It's priced 3% too high. If I bought shares today when it was selling off, if we have days when it's selling, 3-4%, negative, I'll buy it. I'd like to accumulate more Applovin. This is a terrific business. So that's Applovin for you. 2 stocks that I thought would be interesting to talk about. Now it's time to talk about the stocks you want to cover. And Ben 10 weighing in on Trade Desk. Yeah, Trade Desk, I think, I've had a couple like this, which is the business just isn't able to execute, or maybe another business just is stronger, better, faster, provides what customers really want. And it's good to be clear-headed about, hey, is the company I own going to be competitive? If not, then I got to get out. And it looks like Brandon, DSP, and Viant surprised us. I owned Viant, and Viant was a loser for me too. Viant is in the ad tech space, and they surprised me by having less than expected revenue growth. So small caps are going to be riskier. DSP is really small cap. The Trade Desk, not quite a super small cap, but we venture into small caps. I think it's a great place to find really good appreciating stocks, but it also comes with higher risks. So thanks for weighing in on those, guys. Let's talk about OPRA. So OPRA provides a browser similar to Chrome. I'm using Chrome right now. And what OPRA provides is essentially a alternative to Chrome. Just, and it could be, I believe they would say that you have better privacy and so forth. They also do, in a way, they do some security by offering VPN services and things like that. So this is a alternative to Chrome, but Chrome is massive. Its user base is in the billions. So it's not like OPRA is going to be competitive with Google Alphabet. But it's also Google Alphabet's a $3 trillion market cap company. These guys are 1.5 billion. So this is a small cap. What's going on with this company? Well, year to date, stock's down. 1 year, stock's okay. But, the stock is down. It's sold off quite harshly on a few occasions, especially back in the March, April timeframe. Now, this business is growing 30%. When are we going to get earnings from them? October 29th. So we are 20 days from them announcing. And this stock will move on the announcement. If they can continue to grow at 30%, we got no problems. Because these guys are very valuable. I consider them a very good acquisition target for an OpenAI or one of these AI companies that would love to have their own browser. Because right now, to use OpenAI from a PC or even from an Apple OS laptop, people are primarily using Chrome. And OpenAI's number one competitor is Google Alphabet. So you got to go through your main competitor's showroom in order for them to get to your store or your technology. So I'm sure OpenAI would love to acquire something like OPRA, or maybe somebody else would acquire them, because I hear that these AI companies want to create their own browser, which may happen, but I would say, why not just acquire OPRA? You can get it for 1.5 billion. The company is growing. It has very high margins, a good cash flow. The margins aren't as high as I would like. They're not like Applovin at 80%, but the profit is there. Again, if we go 14.5 plus 30, we're up to 44, 45%, well above that 40 metric that shows that this is a good software company, good software investment if it's priced right. So as we look at this stock here, the volatility, it's a small cap. You're seeing it go up and down. And right now the pricing is down on OPRA. I'm not buying more shares. I'd like to see more information from the company, have them announce earnings, understand what their forecast looks like. Now that the Department of Justice has made a decision over Google Alphabet, and the decision was that they're not going to break Google apart, what does OPRA have to say about that? Are they going to be like, well, it's no big deal. We didn't expect it. It's not going to help us, not going to hurt us. I want to hear what they have to say in that respect. These guys are also in Europe, and I would imagine that they probably can serve the consumer in Europe far better. And that's plenty of users. Plenty of users can go to OPRA. OPRA is a discounted stock based on the value of their free cash flows and their future profits. And they have a very good discount, but it's a small cap. So I cautiously put some capital in, give it some time, study their earnings releases, study the business, make sure they're still on the same path of growth, that they still have a good, viable business. They've created a niche for themselves. Great. Now continue to expand that niche and deliver more profit to investors. So OPRA, for me, if I didn't own it, I'd buy it. I already own it. I don't own a lot because it's a small cap, and I'm looking forward to the earnings that are going to be announced in 20 days. That is OPRA. All right, so let's crack open Fiserv and see what's inside. I'm not sure that I have Fiserv as a... there we go. Great. I did a valuation on Fiserv on September 22nd. So I'll just make sure that everything looks good. We'll update it. But let's start with understanding, what is Fiserv? What do they do? Who's their customer? So Fiserv provides payments and financial services technology solutions in the United States, Europe, and Middle East and Africa, Latin America, the Asia Pacific, and internationally. It operates through the merchant solutions and financial solutions segments. The company provides merchant acquiring and digital commerce services. So they're a technology business. Okay. We're going to look at their financials, see what kind of margins they have, just to confirm they're a technology business. Because sometimes, they list as a technology business, but then their margins show that, no, they're providing more like a financial service, but we'll get to that in a bit. I just want to get more familiar with this business. So that way I could look at their numbers, and their numbers are more meaningful to me. So Fiserv. So these guys are okay. So they're providing platforms and payment systems to big enterprises, financial institutions, small businesses. Okay. So they partner with banks, credit unions, fintech companies, big companies, large institutions, public sector. Okay. All right. So we're dealing with a technology company focused around payments, financial services, and that particular area of work. So Fiserv for the last year, not a pretty picture. Down 33%. 5-year up 21.8. Boy, they had a nice run coming out of 22. Their stock went from 98, well over $200 a share. It was looking good, but then it started to come down. Let's take a look at their financials and come back to this chart. Market cap, 68.47 billion. And before I move on, as I look at Fiserv, who's their competition and who are they? Who's in their community of companies, right, within their industry? So they're not quite a Visa. Visa has their own type of credit card, and they really have the rails for Visa as a network. And then they charge everybody to use that network. So does MasterCard, American Express to some extent. So they're not Visa. Fiserv is a little more like PayPal. They're a little more like Block. That's who I'm thinking Fiserv could be compared to. Not exactly like a carbon copy of Block or PayPal or another fintech company, but they are in that kind of ecosystem. That's where I'm thinking these guys belong. Market cap 68 billion and revenue 21.1 billion. PE is pretty low depending on their growth. Forward P is really low, 11.5. Analysts are really bullish on this stock. They believe it's really discounted with a strong buy. Okay, let's take a look at their growth. So they have slow growth, and this is what ails PayPal. This should be a good company to compare against PayPal. PayPal is almost, I think they're growing about the same rate, like 6%. These guys are growing 6.7%, $21 billion in revenue. So this is growth. That's the good news. Growth. Excellent. Good number, 21 billion. Gross profit, they're about a 55% gross profit company. They produce really good cash flow, and it's grown over time. That's very good cash flow. Okay, so cash flow is, I'm going to make a few notes off to the side here. So their free cash flow yield is 24%. That's very good. Their gross margins are 61%. That's good. It's not excellent. Excellent is like Applovin, Palantir is up in the 80s. You've got these businesses that are just really, really profitable. These guys, 61% is good. It's just not great. But I'm liking these numbers. These numbers are very healthy. So something's spooking the market, and it may be that the market believes that there's going to be disruption in payment platforms. One thing that I continue to hear, and I think it's going to happen, it's not going to happen really soon, but that crypto is going to come in and somewhat create new rails for payment systems. That may happen. I don't think it's going to happen in the next 5 years, but I think the story is ailing this company as well as PayPal. And what doesn't help is the slow growth. If Fiserv was growing at 25%, I think investors would be like, that story is completely false. I think these guys are growing really well, and I'm got a lot of conviction behind Fiserv. But that slow growth kind of allows enough room for investors to be a little nervous. I certainly feel that way about PayPal. I own PayPal, so that's why I'm putting myself, I keep bringing back PayPal. All right, so analyst, they think we potentially are seeing a 70% discount on this company. All price targets are above the current stock price. But look at the top analyst, pretty much didn't change. Top analysts are saying 63% discount. Now, if they keep growing at this rate, I assure you this stock is discounted because they have very high rate of free cash flow. Their profitability is going to expand quite nicely. Their profitability is going to expand twice as fast as their revenue growth. It's very good. So their PE is either going to go really low or their stock price is going to go up. I think their stock price is going to go up. These fundamentals look really, really good. Now, the story of how future technologies are going to disrupt, these companies, at times I think they're overplayed because for all we know, Fiserv is going to use crypto technologies, or they're going to reinvent themselves and use a new transformative technology that's going to make them better, faster, quicker. So they themselves should be working on that. So let's get into a valuation, and then we're going to compare this to PayPal. Let's look at the valuation real quick. All right, so I used cash flow from last year, which probably isn't representing the company as recently as it should. So I'm going to go with trailing 12 months, and I'm going to add growth. So and that's what I did here. Okay. So I already had that. So 51.57. I know it's super tiny, but it's the free cash flow is accurate trailing 12 months. Go ahead and update my date. I think it's going to grow based on that. The profitability growth, the growth in profitability is supposed to be about 16%. So I'm comfortable going to 10% on the growth of cash flow because as they get larger, they're becoming more efficient. They're just bigger. They don't have to, hire 2 HR departments, 2 accounting departments. No, you just have one. You just get to run a bigger business with the same infrastructure. So looking at this stock, I put a 9 on there. I don't think let me revisit their balance sheet just to make sure I do all my homework. So we've got 29 billion. Debt to EBITDA is right at the limit. Okay, that's why I went to 9. All right, so we went to 9 because they're right at the limit. Interest rates are dropping. So I'm going to go to 8.5. And okay, so we got that updated. That's fine. Earnings per share. I'm giving them a PE of 18, growing it by 10%. Even though it's expected to be higher, I'll just be a little conservative. So Fiserv is a discounted stock. Now let's look at 2 things. Let's see, when is this stock going to begin to rally? Do we expect, right? We can't call it exactly. If we could, we'd be geniuses and we'd be billionaires. Maybe someday some of us will be. Some of you guys may be billionaires someday. But let's go into, let's study their charts a little bit closer. And then we'll go from there. Okay, so we are looking at Fiserv. So looking at Fiserv, let's look at the 1 year. Man, that chart, it just, everything's going down. When's it going to stop going down? And look at this chart. Like they were just on their way up and then it's come down hard. They are discounted. It's just tricky on these because when will they hit bottom? And as an investor, sometimes I'm more comfortable waiting for a stock to begin to rally. Maybe I show up a little late, but at least I know I'm catching a stock on its way up and I'm not sitting around. Let's just pretend I bought this stock. I bought it at 125 or at 123 and it goes down to 100. And I'm like, geez, well, shame on me because I was seeing a downward trend. This trend is not good. So maybe I just wait for this stock to maybe get some good news and then it starts, going higher. Because my conviction is not overly high on this stock. Part of it is this percentage growth rate is not very high. So my conviction isn't there. It's not like these guys have just been dominating the market for year after year. No, they've been a good quality business, but the market is not like inspired by these numbers. It's inspired by like Palantir, big growth, Applovin, big growth, these big growth companies. So this one here may be kind of ignored for a while. And I'd probably wait for this thing to start to pick up before I start putting capital out there. So it wouldn't be a buy for me. It would be a watch closely, let it start rallying, or some good news, or a very good earnings report. Let's say October 29th, they're growing at 11%. Boom, the stock's going to fly up if that's the case. So that's my feeling on Fiserv. Last thing that I'll cover on Fiserv is, let me compare it to PayPal. PayPal is similar to Fiserv. And they're both, kind of caught up in this slow growth period. And you see that Fiserv for a while was outperforming PayPal. Then they came back together. And now PayPal is doing a little bit better, but I don't think PayPal has any bragging rights. They're down 6.67% over the 1 year. So both of these guys, they're growing mid single digit. They're not grabbing the market's attention. Maybe both of them need to acquire another business and make themselves more exciting. A company that's really done that well is Broadcom. Broadcom has grown, but they've grown through acquisition. They didn't organically create all the products and semiconductors they sell. They acquired companies. More recently, they acquired a software company that manages data center servers. That's maybe what these guys got to start thinking about is how do we acquire some businesses that are going to make us, help us grow faster and make us more exciting. So that's my analysis on Fiserv. Thank you so much for the super chat. I appreciate it. All right. So let me check in on the chat here. Big house. So eToro, CSPI are teaching me to time my buying a little better. Yeah, eToro fits into what we just saw with Fiserv, where that stock is a mystery. It has terrific fundamentals, but the market just doesn't give it a break. And then KSPI. Let's take a look at eToro. Let me catch up on comments, and then we're going to take a look at eToro. All right. So Justin, thanks again for the super chat. Well, good luck. I'm not big on calls and options, so I'm trying to process that. But good luck with that. Ben 10. Yeah, and I think I understand your point. And rather than timing, I would just say, setup, which is, is a stock done going down? Like this stock went up, came back down. If it starts to rally again, now we got something. I guess a good stock to kind of give you the example is United Healthcare. United Healthcare, it went off a cliff, came down. But you see how now it's begun to go up. It's my belief this thing's going to return back to 600, but you see that it's already caught that rally. And I wanted to show it over a broader period of time, but you see that here, this thing bottomed out at 237. It's up to 367 now. If you were in United Healthcare for a month, you're up 15%. You're actually up higher. If you catch that low, you're up, 30, 40%. Now, is it the worst thing in the world to come in a little late? Maybe you bought at 300 like Warren Buffett. No, if this thing goes to 600, you doubled your money. Nothing wrong with that. And you waited for the market to tell you, okay, we hit bottom, we started rally again. That's kind of like what I was trying to describe with Fiserv or PayPal, and it could be translated over to eToro. Let's look at eToro in a bit. Let me catch up on comments, and then we'll get to eToro. All right, so I think I'm caught up on comments. Let's talk about eToro, which is a brokerage platform. They predominantly do business in Europe, the UK. Company's headquartered in Israel. And what is a mystery is that very small cap. They went public not too long ago. They went public May 14th, 2025. So they've been public for 5 months. So not a long time. And IPOs, I try to stay away from them because they tend to create losses more times than gains. So these guys the market doesn't like them. Sold off the stock by 24%. They announce on November 10th, so exactly a month from tomorrow. And analysts think it's really discounted. Now, when I look at the fundamentals, man, this company's got some pretty impressive numbers, growing really fast. We're talking about some pretty substantial numbers, 13.1 billion in US dollars. So this is a high growth company. Now, who are comparable companies? Robinhood, Charles Schwab, Futu. If I show you the performance of those stocks, it's like, holy smokes, those are super solid, awesome winners. So then I look at eToro and I'm like, well, why isn't this stock taken off like those others? And I'll compare this one to the stocks I just named. In fact, let's do that now. So right now we're looking at eToro. That's the stock in focus. We're going to compare it to Robinhood. And then Charles Schwab. What is that symbol? That one. And then I'm going to put Futu in here because eToro is, I'm in the US, so eToro is outside my home country, but so is Futu. So it's a good compare. In 1 second, my phone is ringing. Good old spam call. Guess I'll answer that call later. All right. So, these stocks are all over the place over the 10-year. Let's look at the year to date. So, year to date, Robinhood is, man, just killing it. Number 2, Futu, doing brokerage services in China, up 117%, killing it. Charles Schwab coming in very respectably, year to date, 28%. So you look at those three amigos and you're like, well, brokerages are flourishing. And you got eToro that's growing. You got eToro in Europe. They're growing user counts. Looks like they're going to expand their products to include crypto. So I would expect they're going to do well, but they're not. And it's like, why not? They're doing the same thing as these other companies. That's why I use the word, this stock's a little bit of a mystery. Maybe the market isn't comfortable with it yet. It's only been public for 5 months. There's something there that I can't explain. And I love the numbers. I love the sector and the industry. I own Robinhood and I own Futu. I love the returns I have on those. But this one here has not advanced like I thought it was going to. And it's combination of small cap, unknown company. Maybe we need to let it kind of have a few earnings reports, and then the market will get more comfortable around it. Or it surprises us with negative news, and then we're like, aha, I guess the market was wise not to buy into eToro too early. A lot of IPOs. It's not a pretty picture. Let me show you, and I may be able to, now let me show it to you just cleanly. Let's look at our friends at Robinhood. They IPO'd. After the party was over, there was just empty wine bottles, and this stock went down substantially. Now, it took a while, and then it went up substantially, right? So buying was a good idea over here. This is Robinhood, a very successful company, and it's doing really well. So back to our friends over at Etoro. Well, if they're going to follow a similar journey, and hopefully someday these guys will be worth $140 billion in market cap, they may have some short-term pain, like for a year, maybe 2 years, until the market gets more comfortable with them, and then they begin to flourish. So I think this thing needs to set up a little better. Right now, it's a little bit of an undesirable because it's an unknown. Let's study their financials on their earnings, and we'll go from there. Because right now, the fact that's ailing this stock the most is that it's so new, and the market's just not comfortable with it. I believe it's discounted, but who cares? If the market just doesn't know it, doesn't believe in it, doesn't have any conviction on it, just not going to go anywhere. If I'm a little late on eToro, that's fine. Maybe I only make 50% on it. That's fine. I'll let the first 15% tell me that the market is now buying eToro, and I'll jump in there. So I'm going to watch the stock. I'm not going to invest in it for now. That's eToro. All right, good stuff. Let's see if we got anything else on the chat. I've got more stocks to cover in case there's nothing else in the chat. Okay, so NBIS is soaring. Is that Nebius? Yeah, man. These data center stocks, incredible, breathtaking. I'm playing this space by buying Amazon, Google Cloud, or Google. This is just too risky for my blood. These are businesses that will do well so long as there's growth available. But man, if the growth stops, this one's going to go down really fast. But for now, congratulations to all Nebius stockholders. Congratulations. These guys switched over from being a crypto miner over to being a high performance data center company, providing super or clusters of GPUs for companies that want to use those GPUs. So this one's been incredible. It's just risky. So we'll see how it goes for Nebius. SoFi's doing well. SoFi has been doing really well year to date over the 1 year. Good job, SoFi. High PE, but they do grow quite quickly. So their growth is good. So SoFi is doing well. All right. So is it Oddity? ODD? Yeah. Yeah, we covered Oddity a couple weeks ago. Really small cap, 3 billion, excuse me. And what's been going on with these guys? They're doing well overall, but man, they really have sold off. They announced on November 5th. Okay, we'll see how that earnings go. So Hive is doing the same thing as Nebius, huh? Yep, data center company. And same thing. They used to mine Bitcoin. They switched over, and now they're, hey, we're a data center company. Look at this revenue growth. Not very good. But investors are just looking the other way and saying, I want to be a part of the cloud infrastructure business that is going to rent out GPUs to companies. And we'll see how that goes. I think it's risky. And we'll see how they go. All right. So let's go over Baba. What happened over at Baba Land? Let's see. Let me close this guy. Close this guy. So Alibaba was down 4%. Now this stock's doing well for the 1 year, 58%, year to date, 104%. So this stock's really picked itself up. This is a big cap stock, $388 billion in market cap. Revenue, $139 billion. P ratio is rational, 20.15, 22. This is a Chinese company. So you get a discount on stocks that are sold in China. And that's just a fact. Small dividend. Has a small discount according to analysts, but they say it's a strong buy. Speaking of Nebius, speaking of, was it Hive? And even Core, we put them in there. When you buy Alibaba, you're buying a cloud infrastructure business, but you're also buying a business that's diversified. Alibaba has e-commerce. They have their cloud infrastructure business. Alibaba also has a fintech business. We talked about Fiserv. You have Alipay, which is a big payment network. So you're getting a better diversified business. And I like that. It's a strong business. It's going to be one of the most important companies in Asia. So the stock's doing well. It's down for the day. I own a lot of Alibaba. If I didn't own as much Alibaba as I own today, I'd be buying Alibaba because their growth is underrepresented with the fact that they are going to be the cloud infrastructure company for Asia. It's the biggest cloud in Asia, and it's going to be providing all that cloud infrastructure for Asia. Meanwhile, it's the number one e-commerce platform where all these vendors can go on their platform to sell their goods. So this is one of the important businesses of the world that I want to accumulate shares in. Now, I'm done with my accumulation. I'm going to wait for them to announce. November 14th is when they announce. And what I thought would be interesting would be to cover Mercado Libre and take a look at Amazon, Alibaba, Mercado Libre, kind of, and see where the stocks have been. I own all three. Why do I own Amazon, Alibaba, and Mercado Libre? Well, e-commerce, I don't think I need to convince anybody, is the now way that we buy things, right? It's so darn convenient. Go on Amazon, 2 hours later, the stuff's at your doorstep. Incredible. And in the future, it's just going to be more of the things we buy, businesses buy. It's going to be done online. It's on your phone. Pretty soon you'll be wearing your Meta glasses and look at a product and go, hey, Amazon. Yeah, how can I help you? I want to buy the same, fill in the blank, the same shoes that person's wearing. Send me those shoes in a size 11.5. You got it. That's coming. And stuff being delivered via drone, that's coming. I mean, it's all coming, right? So I like these businesses because they have a big place in the future. And Alibaba, my stock's doing well there. The market sold it off today. No big deal. It's doing well for the year. What is an opportunity is Amazon. Amazon for the 1 year is up 23%. Year to date, it's just barely keeping its head above water at 2.66%. The market, for some reason, is saying, we're a little unsure about Amazon. And I can tell you, I'm sure about Amazon. I know I have high conviction that they're going to be stronger, have even greater scale and a success in the future. So I'm buying Amazon. I'm holding my position in Mercado Libre, and I'm holding my position on Alibaba. But it's interesting to see that, the biggest name on the board is not appreciating as well as the other two in 2025. I also am buying shares of Mercado Libre, I should also say, because I think the pricing of Mercado Libre is quite good. So Alibaba is a terrific company. It is not a problem that it sold off today. Not a problem at all. Mercado Libre went in the other direction. This is the e-commerce company to Latin America. So Mexico, Colombia, Brazil, Argentina, Peru, Paraguay, a lot of people down there. They want to buy stuff. They want to go online. They want to order stuff. Mercado Libre. They probably have the ideal catalog and bring vendors to their site that Latin American market wants to see. So I think it's a terrific play. Now, by owning these three companies, I own e-commerce operations in North America, South America, Asia. I'm good. I'm really good with the e-commerce play. And Mercado Libre has been discounted recently. It's good to see the stock rise. I think yesterday it sold off 5 days. It sold off on a couple of days, and I was able to pick up some stock because of these sell-offs. See these points here. I'm a dollar cost average investor, so I use that type of market action in my favor, picking it up at a really good price. So good to see you, Mike. And so on Mercado Libre, let me show you the value of Alibaba, Mercado Libre, and Amazon. So Alibaba, I believe, is discounted by 12%. Not a giant discount, but this is a very well-known company, terrific moat. I'm good with my shares. I could just sit tight. And when we go to Mercado Libre, it does have a nice discount of 29%. Again, strategically has a lot of advantages down in Latin America. And some investors may look at Mercado Libre and say, yeah, but Amazon's probably going to want to take them out. It's like, okay, Amazon has begun to try to take them out, but they began in 2010. And guess what? It isn't going to happen. It shows that there are regional customs, preferences, know-how, cultural knowledge that really does make a difference. Mercado Libre has been able to grow since 2010, just really, really well, because I think they understand that market better. They're probably attracting vendors to their platform that are ideal, where Amazon's, US centric, and the way that we think about e-commerce is based on the US model. Well, maybe folks that are ordering stuff in parts of South America, they think differently. They like to shop differently. Well, I think Mercado Libre connects with that market far better, and that's why they're really operating quite well. So I'm adding shares in Mercado Libre, and I'm really glad I'm doing that. And last, let's look at the one of the most valuable businesses on the planet, Amazon's discounted. And I'm adding shares of Amazon. I'd like to own a lot of Amazon because it is one of those great businesses. A lot of conviction there, a lot of confidence, because they just know how to make themselves more valuable year after year, decade after decade. So I'd like to own more Amazon. So interesting to see that Alibaba and Mercado Libre traded in opposite directions. And now we'll see where they go from here. I think in the next 5 years, both of these companies are going to be worth a lot more. And I'm glad I own their shares. All right. So Big House Juice had a comment on Amazon. So the speculation about Amazon selling cars, it's fact. They're already selling Hyundais and they're selling used cars. Hertz made a deal with Amazon where Hertz is selling, you know, how the car rental companies, once they're done with a car after a couple of years, then they'll sell it. They're selling a lot of their fleet that's ready to be sold on Amazon. So it's not speculation. They're doing it. Now, is it worth it for Amazon? We'll see. I think if it is, they're really going to grow that piece of the business. But we'll see. I think the Amazon brand, one thing similar to Walmart or Costco is, you know, a company's brand becomes really valuable because the consumer has a level of confidence that, hey, if I buy a product there, if the product's not meeting the standard that I expect, they're going to take care of me. It's going to be, or it's just going to be a good product because everything I buy, like Costco, right? It seems like everything I buy at Costco is good quality. I think they have a very good team of procurement people that know that, hey, if we're going to put something in a Costco, it's going to be priced right. May not be the cheapest price in town because they give you good quality. And it's good quality. That's how I feel about Costco. And I think Amazon also through their ratings, right? You can see 4 or 5 stars and so forth. So I think it could open up a pretty large category for Amazon, which is used car sales, and bring in more vendors. Right now they have Hyundai, new cars. They have Hertz that's selling used cars. So yeah, so Costco, as we get into the holidays, and we're probably going to host a couple of big gatherings, that's my go-to. You know, like I usually do a nice roast, maybe 2 of them. I go to Costco. The meats are excellent and the quality is what I'm after. And they usually have everything is good quality there. Whether you're buying a product for your garage, product for your house, food items, just Costco always comes through with giving you a very good price on a quality product. That's so they can maintain that brand. So, all right. So let's talk about Uber. And look at that. Michael Anthony's talking about Lyft. So we'll take a peek at Lyft. But for now, let me go into Uber. So Uber is a business that I think is going to be very, very important. And I love this setup here. Look at this setup. It's just going up. It's going to keep going up. I can rationalize how this business is going to be a $1 trillion business over the next 5 to 10 years based on their growth rate, based on their position in the market. And it's a stock that I own a lot of. If I didn't own so much, I would have bought stock today on a nice pullback like that. 18% growth on $47 billion number. It's very good growth. And you see the acceleration, 16.9, 17.9, 18. They can keep pulling that off. great. That means they're building momentum. And as we get into the era of robotaxi, Uber has the biggest network customer base that is very comfortable hailing rides. Are all of them going to be comfortable with a driverless car? I don't think so. I know I'm comfortable, but you ask my wife, she'd never get into a car that's basically a robot. So I think that Uber's set up to be kind of like an Amazon for ride hailing and food delivery, maybe even transportation, although their Uber logistics never really grew all that much. So they might even get rid of that business. So I like their growth. I like where the company's going. I also like the fact that they don't have to put excessive capital into the business, because who buys the cars? The drivers. They don't have to buy a bunch of cars. So excuse me while I sip my coffee. So I like that high cash flow from Uber. Terrific. The free cash flow margin, 18%, profit margins, 26%. I really like those fundamentals from a growing business. So I like that. And I really like the setup of the stock. Forecast. Let's take a look at the forecast. 32 analysts cover it. They believe it's discounted by 9%. Consensus is they're going to keep growing. And they're going to be a $76 billion revenue company in 2028. That's terrific. And they're going to continue to grow. Oh, man. I love the sound of that. And their profitability is going to expand faster. As they get bigger, they get more profitable. So you keep growing, Uber. And the PE isn't going to drop. The stock price is going to go up. That's my expectation on Uber. Uber is a nicely discounted stock. The discount on Uber is a good one. And right now it's discounted by 50%. And the market, right? I'm going to say this a few times because it keeps happening, is you have a market that will believe in a story. And the story was, oh no, Tesla's coming to town and Tesla's going to take Uber's business away. Okay. So what it did was it took this stock. This was even before we had the March meltdown, right? And it discounted by 30%. Well, I was buying Uber, just buying it up. And the stock really from that point to where we're at now over the course of less than 11 months is up 60%. The market will give us gifts like this. They're disguised in these negative stories. And you think about how quickly Tesla is going to be able to get to their robotaxi business. Maybe some point they'll be operating and have scale. But I'm willing to guess that's going to take 5, maybe 10 years. Between now and then, Uber's going to get bigger. They're doing partnerships with the likes of Google Alphabet, as well as they're going to have an Uber branded service through a partnership with Neuro, which is a software company that Google Alphabet owns. And they're going to use Lucent cars. They're going to have 300,000 units over the next couple of years. So this is what the market will do on great businesses. For a while, it'll get nervous. Oh, Uber, Tesla's coming to town. I mean, Tesla is notorious for being late on their products. What made people think that they were going to be early on this one? And where's Tesla now? They don't have one physical car that's actively giving passengers rides as I speak. They had a test run in Austin. They had 20 selected riders, And the car had to have a human being from Tesla in the car at all times. It had an emergency brake pedal. And on a few occasions, that person had to act for the car. So I don't think Tesla is going to come to market with their solution or their robo-taxi service for a couple years. Of course, Waymo's already out there, but it's taken a while for them to build scale. And they're partnering with Uber on a couple cities. So we'll see. And the point being is the market will offer us or will present us opportunities, and doing our homework and taking advantage of them. Man, that is so fun. That is so fun to pick up stock and then just watch an investment rise. So Uber sold off a bit today. No big deal. It's fine. And look at this channel. Isn't that beautiful? Oh, man. You just keep going in that direction, Uber, until you get to $300 a share. That'll be just perfect. Now, somebody brought up Lyft. And you know what? I'm not even going to chart Lyft. Lyft is lost the war to Uber. They're discounted, but they're kind of being counted out. And I think it's rational to count them out because they basically lost the war 10 years ago. Uber won. And I don't think they'll ever catch up. Best thing that can happen for Lyft is they get acquired. All right. So we got lots of chatting going on. Mike, the dividend investor guy, on a buying spree. He bought some oddity, Rally and Root. I bought Root today. And what is Rally? Remedy. Okay. Remedy engages in the provision of digital financial services in the U.S. So they're doing remittances. I remember looking at this business and they're growing well. Look at that growth. Jeez. Profits are good. Free cash flows there. Yeah, this one looks good. And I believe they are discounted. Boom, 70% discount. They're generating cash. They're growing fast. It's like, hey, if these guys keep growing at their rate, generating that kind of cash, market will not ignore them. Man, good luck with that. All right, Adam Skidmore, good to see you. Intuitive Surgical, EVLV. I know Intuitive Surgical. So Mike needs more Uber, but you need a good price. You got your head in the game. That's the way to think. Yep. Never got into Uber, and I could tell you a couple stocks that I missed on. But you know what? So long as you catch a good number of them and they're making you money, the money spends the same, whether you made it on this stock or another stock, the money spends the same. We're good. Yeah, you drive a hard bargain. All right. So, man, a lot of chat. Thanks everybody for showing up. I still have a couple stocks to go, and I'd be happy to cover stocks that you guys want to nominate. If you're a member, free of charge. If you're not a member, $5 super chat. The stocks I wanted to cover from here are Reddit, Comcast, and a couple of others that are on the top stocks within stock analysis. So that's where we're going. And of course, I'll take a detour if you guys want me to see a stock. And Nathan, good to see you. You came from Daryl's channel. Cool. Daryl is my colleague, and I I'm becoming a better investor by understanding how he thinks and how he looks at charts. I think I'll be able to acquire stocks more effectively. I'm still going to have my same strategy, which is try to find great businesses that are discounted, buy them at the right time, own them, and just let them compound. But I think Daryl's making me better, and look forward to streaming with him tomorrow morning. All right. So I caught up on chat. Let's go to Reddit land. Wait, I'm sorry. Yeah, Reddit. Reddit is the next one. So Reddit land, I think, was happy today. The Oompa Loompas were quite happy over Reddit land, up 4.65. And Reddit has seen a little bit of a sell-off. Not enough for me to pick up some shares because it just has been going up too much, too fast. But here's one more example how the market says, hey, knock, knock, who's there? Opportunity. Well, let's take a look at this. So Reddit IPO'd about a year ago. When did they IPO? I guess about a year and a half ago. And the stock went up and then it came back down. Now, in that time, they had more earnings announcements. They had more information released. And I love their growth rate. I love their profitability. I like Reddit. I think it has its place in the social app space. I like a lot of things about Reddit. And I specifically loved the price the market said, hey, you want to buy Reddit at a discount? Have I got a good price for you? How's $86, $87, $100 a share sound to you? Well, that sounds pretty good. So I bought a bunch of Reddit stock, and ever since then, the stock's pretty much doubled. Isn't that awesome? And the market will do this over and over and over again. Now, what is obvious about Reddit is that it is growing. It is flourishing. It's experiencing a growth period that is really impressive. What's also obvious is they make a lot of money. Gross margins, 91%. 91%. That's like Visa. That's huge. That's really high profitability, cash flow. So they cash flow, they make lots of money, they're growing fast. Bingo. So this was one that this was in our community. This is what we saw together. And we covered it when it was in this period, and we called it out. Man, this is a good opportunity. Man, this is a good opportunity. And bam, it went up. Beautiful. This stock's kind of given up some of its gains. And this stock is gone up so fast, so much that it's still priced above its intrinsic value. I'm not selling any shares, keeping my shares, but it's still 19% above its intrinsic value. Now, if you offered me a share for $170 per share, which is the fair value, intrinsic value, I would buy that share. I think Reddit is going to be a bigger, more important business in the future. And we'll see how things play out. They're going to announce earnings. When are they announcing earnings? So they're going to announce on October 30th, the day before Halloween. And so that's about 21 days from now. And I look forward to it. I really look forward to it. If they keep growing, this stock's going to kick up again, and we'll see how high it goes. So Reddit had a good day. It's been having kind of a weird, or I should say, just giving up some of its gains. But, feel free to be greedy. Nothing wrong with that. But I'm up so much on the stock that it gave up some of its price, and I'm like, no big deal. It's down a little bit. If it comes down another $30, I'll buy some shares. But I don't think it's going to get down much more. We'll see how it goes. All right. So Reddit, another one of those nice opportunities that came down. The market said, hey, go buy Reddit. Zoom went up 3.57 today. Now, Zoom has been kind of a little bit of a sleepy stock. It's up 21%, but year to date, it's only up 1%. This thing is a cash cow, but it's not growing fast enough to get the market's attention. I think we saw this with Fiserv, and I think I covered it with PayPal. Is some of these businesses get into these slow growth periods, and I think they should acquire or merge with other businesses just to keep like their enterprise growth, momentum. Just keep growing, because if you get into this slow growth period, the market just doesn't get excited about your stock, and pretty soon you're just kind of just bumping along a particular stock range, and that's it. So these guys are really profitable. They're discounted stock, 24.75 billion, revenue 4.75. These guys do provide really good software for video conferencing, and they have terrific cash flow that's grown a lot. I mean, they make a lot of money on their products, 76% margins, profit margins of 25. But you see that they're under that 40 key ratio, 25 plus 3 to 4. That would get us up to about 28, 29. We're well below that 40 metric. So it's not a good investment. And I think that's what's ailing the stock, is they're not growing fast enough. You got to grow faster. And that's what would make the stock rise. Or maybe they get acquired by somebody else, or they should acquire somebody else, but they should do something to make this stock work. I don't know that it's going to go up much higher. This is a discounted stock, might even be a value trap since it's a slow grower. Overall, it's discounted. That cash flow is so high. And do they pay a dividend? They shouldn't. Maybe they should. They should pay a nice dividend because they have a ton of cash on the balance sheet. They have $7.78 billion, almost no debt. And I believe these guys did announce, were they going to do a massive share buyback? I know that these guys or DocuSign were going to do a massive share buyback. And they should do that because they have all that cash. What else are you going to do with it? You can't make a lot of money on it now because you have low interest rates. So Zoom is a sleepy stock, not going very far. We'll see how it plays out. Okay, so all right. So let me take a look at, let me show you a list that I've been kind of finding interesting. And if you go to stock analysis and you go into stocks, they have top stocks. And these are, the stock analysis website is using the top analyst and kind of showing where they have, total upside, as well as these are the top analysts that are out there. And I did a video for the community that covered, the top stocks. But the good news is this list is changing. It's not a static list. So it's been changing. And some new names that came up that I wanted to cover, Comcast. And I had covered Comcast before. I think it was part of the communication services video I did. And the fundamentals look good. It's a name that is a lot of legacy businesses with, baked in there is some good businesses too. Some businesses that have a very strong future. And the other one is Norwegian Cruise Lines. The reason I wanted to look at that, is Delta had a very good earnings announcement that, hey, people are traveling, they're paying up for like, better airline tickets, business class, first class, that kind of thing. So I'm sure people are like, hey, I want to take a cruise. So we'll take a look at that. And then we'll look at Allegra Microsystems. So we'll look at those three off the list. I've covered all the others on that video that I produced for the community. So take a look at that community video. If you're a member, you'll be able to see it. If you're not, become a member, you can see it. And you can see the reviews on all these other ones, like DraftKings. And I have heard more recently some concerns around Blue Owl. I heard the concerns after I did the video. All right, so let's get into Comcast. So Comcast is a combination of old businesses and new businesses. The old businesses are like NBC, cable channels, and those are just basically like undesirable right now. Not very good. And it looks like your list was different, huh? Interesting. I didn't make any choices there, Mike, but I'm going to go study that again. And you're talking about this one here, right? Top stocks. Yeah. So I didn't choose anything. It just kind of lists them out. All right. So Comcast, they have the old businesses, linear TV, cable, but they have some businesses that have a lot of value going forward. They do have a streaming service. They do have the broadband cable or broadband internet service. So that's valuable. So they have some pieces that are valuable and some pieces that are like, man, these things are expiring. So that's the story high level. But when you look at the business, just looking at the numbers, right? Market cap, $111 billion. PE of 5. Not a misprint. Forward P is 6.97. Man, talk about the market not wanting to pay much for this business. Now, if you're an older investor and you're looking for a nice dividend, that is 4.29 sound on a stock that is just based on fundamentals discounted. And I'll show you my valuation in a bit. So that's a pretty good proposition. It's like if you want income, you want to buy a stock that's pretty much counted out. Comcast, they're going to split the company into two parts. One part is going to be all the businesses that have a bright future. And then the other piece is going to be all the businesses that are legacy. So maybe investors are waiting for the split and they're like, once the split happens, I want to buy the part that I want. And I don't want to buy the part that's going to be undesirable. Maybe, but maybe now you'll get a discount and you'll get shares in both companies and you'll be better off for it. We'll see. I'm not a stockholder of Comcast. Now, after all of that, they've been growing a tiny bit, which is kind of like the Apple growth. Apple's been growing just a tiny bit and contracted 1 year. And Disney's not doing far better than this, by the way. Disney's not a high growth stock either. Gross profit's pretty darn decent. When you think about the scale of this business, they're doing $19.4 billion of cash. Boom. Gross margins of 70% on a big business. Very good. Profit margins, 18. So these numbers look pretty darn good. Okay. And the one thing that is a problem for me is this balance sheet. They decided to spend like drunken sailors, and now it's time to pay the credit card bill. They have $101 billion of debt, only $9 billion of cash. So they have net $92 billion of debt. So when we go debt to EBITDA, 2.5, that isn't too bad. But it is going to decrement that high debt level. It's going to decrement from the overall value of the business. Now, let me show you my valuation on Comcast. The numbers on Comcast I find really attractive. 61% discount. It's like, man, the stock market does not like this stock. Just doesn't like it. I think we've seen a couple stocks like that on this live stream where it's like, just a stock it doesn't like Fiserv. It just keeps going down. Comcast keeps going down. But you better believe this stock, I'm watching it. And if it starts to tick higher, I'm probably going to buy some shares because there's just too much value to ignore here. Good dividend, good safe stock too. These guys, people are not going to cut their internet service. The other business they have, like their streaming business, hasn't been a wild success, but it's there. They also have a theme park business, and that's doing okay. I think they, instead of like Disney owns and operates a lot of their parks, I think that Comcast does a lot, will allow third parties to operate their parks, and they provide a lot of the, I'm going to call it the intellectual property. Like they get to use their characters, their name, and all that stuff for Universal Studios and stuff like that. So this is a business, that you can pick up for a really low price. But when is it going to be the right time to pick it up? I'm going to take this one and I'm going to put it on my list for tomorrow's call because I'd love to get Daryl's comments on this. I'm going to put the Ask Daryl note on Comcast. I'd love to hear what he's saying and see how he would play this stock. But it really does pull me toward this stock because I think if it starts to rally higher, it wouldn't be a bad idea. Wouldn't be a bad idea at all. So I will watch it and see if Comcast becomes an attractive opportunity. For now, it doesn't cost me any money to watch that stock. Comcast. All right. Next one up is NCLH. Norwegian Cruise Lines. And I've never taken a cruise. So let me catch up on comments here. All right, cool. All right, caught up. So I've never taken a cruise. I want to take a cruise up to Alaska. That is on my bucket list, and go see the Glacier Bay and all that stuff. I've heard that's the way you want to visit the glaciers. And this stock here, it's talk about a dive downward, right? It took a dive and then it picked itself up. 5 year, wow. You had COVID, a pandemic, then the stock rallied, then it came down in 22. I mean, it's been everywhere. So this one here, $10.6 billion market cap. PEs look like a affordable stock. Analysts say 22.6% discount. And, now economy wise, right? I don't know. It seems like the wealthy consumer is doing just fine. So maybe that's who takes Norwegian cruises, or as a cruiser, I guess. Delta had a really good earnings, so I don't think the situation is bad, but I don't think it's great. It's not like we're in a boom economic cycle. These guys are not growing all that tremendously. And these numbers are wacky because they went from, 6 billion down to 1 billion, and then they started to grow again. So the growth is they just needed to get back to what they used to be, but they are far bigger than they were in 2019. I would point out. So it looks like it's a steady growth business. I'm curious to see what kind of margins they have. Gross margins of 41. That's pretty good. Pretty good. Profit margin 7.5. Not really good. And then negative cash. So I wonder what analysts are thinking here. I'm not really seeing big opportunity. But according to stock analysis, they said, analysts really like this one. Yeah, the top rated analysts are saying 34% discount. They're expecting that this stock is going to actually grow better next year, keep growing almost double digits across the board, and their profits are going to expand really nicely. Well, if that's the case, yeah, the stock's probably going to go up in price because the profitability is really going up. But this is not a sector that I have a high level of conviction, confidence. It's not that interesting to me. I'm like, I want to go find a good semiconductor stock. I want to go find a good software stock, a good communication services stock. I'll pass on the cruise lines, but I wanted to share it with you guys. It's listed. And the last one on my list seemed interesting by name. Allegra Microsystems. What do these guys do? Allegra Microsystems, together with its subs, designs, develops, manufactures, and markets sensor integrated circuits and application-specific power ICs for motion control, energy efficient systems. Its products include magnetic sensor ICs such as position, speed, current sensor. Okay, so a lot of sensors, and I imagine this is part of the semiconductor technology. Imagine they're going in cars and aircraft. So here's what a lot of EVs are coming with. I think they refer to this as like the skateboard, and then the manufacturers build their bodies on top of this. That way they can have efficiencies of scale, and a lot of these are being made in China. I just bought an EV in September. Took advantage of the incentives. So here's, okay, yeah. So these guys are part of the car business. Okay. Got it. And they create some products for solar, which is not doing great. Applications, automotive, industrial, energy, consumer. So the solar, not doing great. Automotive, I think the number of units sold going forward is going to go down. I think especially the quarter we just ended is going to be a good quarter because the removal of the incentive on September 30th compelled a lot of people to go buy an EV that were on the fence, yours truly being one of them. I'm like, man, if you're going to give me that kind of deal, I'll take it. So I bought an EV and I'm happy with it. Glad I bought it. So I'm not overly bullish on the future of this company. And boy, look at this stock. It's been places. It was doing really well for a while and it's really come down 98%. But boy, you probably had a couple of sleepless nights here or there. The 1 year 33, it's still performing well. And it is going higher, which looks good. Very good. Market cap, $5 billion. Revenue, $761 million. Forward P of 43. Their sales are declining. How is their stock price increasing? That doesn't make any sense. Huh. All right. So we have a business that's losing, revenue. Its revenue is contracting, but the stock price is increasing. But you saw the volatility. So I think the business is a little risky. Gross margins are okay, which is not as good as good and not as good as excellent. Probably have like 4 or 5 different rungs. There's bad, there's okay, good, and excellent. These guys are okay, not great, because look at the profit margin, minus 9%. Free cash flow, 6.5. It's not very good at all. And you think about companies or product companies like this, they have to put a lot of materials, direct labor into their product. By the time they ship this thing out, they've got a lot of money into that product. And that's what holds back the profitability. So this one here, again, I like seeing these. I think it's interesting to see what analysts are saying, but it is not a stock that I'm interested in. 29% discount according to them. I think they're expecting that the business is going to start growing again. Okay. But the underlying cash flow and profitability, non-starter for me. So Allegra Micro is not going to be something I buy. All right. Man, we covered 12 stocks. We are rolling. Ben 10. Let's see here. Make sure I didn't miss anything. Okay, so cruises are outstanding. I've heard that from several people. I've heard that what they really enjoy is it is a carefree vacation. Sometimes vacations could be like, you can take a really adventurous vacation, which is awesome, but there's a lot to do and a lot to set up and, that kind of thing. Well, cruises, man, you just get there and you are chill, you are relaxed. And I want to take that Alaska cruise, man. Get my whole family up there. I would like to go. See, when I was a younger man, I'd be like all over the national park. I live in the west of the US. So I've been to Banff, Canada. That came up today. A friend of mine was just there. Called me today. Said, hey, I just came back from Canada. I was in Banff. Got to go to Lake Louise. Yeah, I went to Lake Louise. It was beautiful. Turquoise water. I've been to all over Montana, Yellowstone. If you've never been to Yosemite, Yosemite is the most beautiful national park I've ever been to. It's incredible with waterfalls. I've been to Moab, Utah, mountain bike Moab, Utah. Beautiful. Arches National Park. Been all over Colorado. So there are so many beautiful places to see. There's so many beautiful national parks. And I've been to Oregon, been to Washington, through the San Juan Islands. And I love that kind of vacationing. But as I get older, I'm just not the young man I used to be. I used to love camping. Not anymore. I love a comfortable Airbnb or a hotel room. And oh well, I checked a lot of boxes in my young days. But knock yourself out with the national parks. I want to go back to Yosemite. They have some pretty nice lodging. Like they're kind of not quite cabins. They're like canvas little huts. My sister did that. She really liked it. All right. I'm going to ask Daryl about Comcast tomorrow morning. Ben 10. CHY. Is that a stock you want to look at? This is a fund. I don't think you want me to cover a fund. All right. So Mike bought SoFi at $6. No wonder he could afford these cruises. Look at that. You're sitting on a nice gain, my man. Good job. Nicely done. All right. So did you want to see Chime? Is that the stock that Chime Financial? I've looked at this one. What do these guys do? Chime Financial, a financial technology company, provides digital consumer banking and payment solutions. It offers Chime banking application, providing mobile banking services. Okay. And these guys are less than $8 billion in market cap. The stock's been selling off. Okay, these guys IPO'd June. So we're in the IPO year. And look at that. These IPOs tend to do this. They sell off, but they become an opportunity. Okay. November 5th is their next earnings. I want to see a couple earnings before I, take the plunge. Let's take a look at their growth. Wow, look at that growth. That looks beautiful. So if they're going to grow really fast, and we've got an earnings around the corner, this is a good watch stock. Totally good watch stock. Gross margins 87%. Totally a watch stock. Got to watch this thing like a hawk. Because at some point, if they keep getting better and more profitable, this is going to be a very, very good company to own. 4 analysts cover it. They are very optimistic. 77% discount. Looks good. Now, the growth is not super exciting. So they are pretty good size, but it's not super exciting. They got to grow faster than that. For now, it's a good watch stock. And as we head toward low interest rates, companies like Chime are going to begin to really work. Because when you have super low interest rates, investors become more willing to take more risk. And companies like Chime, if they could show growth, they're going to attract investors. I think I have Chime in here. I do. And Chime, I cover like a bank because they are operating like a bank. And for now, they're not making enough earnings per share. So I'm not seeing them as a discounted stock yet. They got to grow. They got to show us a little more profit. And then I'll be willing to do that. And I'm looking at a couple years ahead, by the way. So it's going to be a stock that I watch. And it may be a stock I never buy. I never bought SoFi. And that's okay. You know why? I bought Robinhood. And Robinhood's done just fine. I bought Coinbase. It's done great. I bought Futu. Fabulous. So for other people, SoFi was great. Awesome. My friend Mike made a lot of money. Awesome. So let's buy stocks that we totally understand, believe in, have high conviction on. And, investing is a solo mission. We get to see everybody else's research, take that in, but then it's our own individual decision. It's always our own individual decision. Everything that I share is just my journey. It's never investing advice. So those are examples where you don't have to take the same lane that everybody else takes. You can go pick those stocks that make a lot of sense to you. We'll see how Chime, makes it through the next couple of earnings. I'd probably want to wait a year before I got serious about Chime because there is not a lot of profit left in this business. Man, a lot of stocks have been covered on the chat. Man, the chat is just really, really active tonight. Good stuff. All right, guys. So I'm going to try to land the plane. Wow. So you attempted the Moab Ultra Marathon. And Ultra Marathon, is that like 48 miles or 52 miles? God, man. That's nuts. That's good nuts. It's great that you're out there. It's great that you're staying fit. But that's out there. All right. So more stuff on Chime. Yeah, I've got to see some more earnings on Chime. I'll track it, but no capital into that company just yet. All right. Well, that was a very fun stream. Everybody, thanks for tuning in. Thanks for the very active chat. And if you're not a member yet, become a member. You can take this chat into the Discord. You got to be an advanced member, by the way, not just a value member to go into the Discord. And you can keep the chat going in the Discord. And when you come on the streams, you can put up a stock that you want me to analyze, and I can analyze it. Like you saw today, we analyzed 13 stocks tonight. Kind of really went through a good list, research companies. And like I showed, on a couple of occasions, like what was a good example? Reddit. If we do our homework, we stay on these stocks, we can find really good opportunities. So consider being a member and really just locking in on good research skills. And thanks for the comment, Adam. And I'll put it up there. And I think it's a good program, and it's a great community. I'm getting a ton of value, frankly, because there's a lot of good stocks to get brought up that I wouldn't have brought up on my own. And I think as everybody else is looking for good stocks, we look at them together, and voila, we get some really good diamonds in the rough that end up being really valuable. So become a member. It'd be great to have you. And for now, it's adios. I'm going to stream tomorrow with Daryl. How you doing, Tomas? Let me say hello before I tune out. Great to see you. And we're going to stream tomorrow at 9 a.m. Eastern, Friday. We kind of put a final stream for the week. And then next week, like today, Delta announced, it's, not to disrespect Delta, but it's not a super important earnings. But next week, I think on Tuesday or Wednesday, the big banks will do earnings. That's officially the first big day of earnings. And there it's going to be hot and heavy for like a month and a half. It's going to be big earnings after big earnings after big earnings. It's going to be awesome. So catch your breath this week, because next week it's going to get really, really active. And we'll see what the big banks announce on Tuesday or Wednesday, and we'll go from there. All right, everybody, have a good night. And thanks again for tuning in.